Today we are checking back in with Cardano's ADA Coin, performing some technical analysis and making some predictions on where we can expect to see ADA go in the near future. Let's get into it. Welcome back into the Cardano chart, guys. If you'd like to buy Cardano or want some free Bitcoin, there are a couple of links down in the description of today's video. So let's have a look at ADA here. And as you can see, our prediction, sort of both of them came into fruition. We either said we're going to break sideways or downwards. We knew we weren't going up past this key point here, which is at $1.20. That was the top end of our sideways channel for the time being. We did get daily highs over that, the highest of which was on the 8th of February over here. And that was a high of $1.26, but ultimately no closes above that point, even though we had 4 consecutive days past that. And that's really, I suppose, due to the fact that we've got this horizontal resistance point here, as well as the 50-day moving average also acting as resistance. We then unfortunately did continue to fall back here, fell back below that key 20-day moving average as well, and then our key line of support was broken at about $1.01, unfortunately. And then sort of our second little thing played out over here, and we started moving in a downwards direction. But I suppose now that we have done so, where are we going from here? Well, let's zoom out a bit and just take into perspective a bit of what exactly is going on at the moment. You can see over here we have had a bit of a bounce. I'll just zoom in for you so you can see that. We have bounced on the day low over here on the 22nd of February. The day low was at 81 cents. So first thing I really want to do is see, is that a point of interest previously? So moving down to 81 cents, and you can see that this is a bounce point in the past as well. So what I'm basically going to do is grab another horizontal line over here and put in place a bounce point which is sitting at about 81 cents or thereabouts, and have a look across and see what has happened since then. Not really any touch points, of course, since then, but it looks like we have bounced off that point. That is, for us right now, our major point of support. And if, unfortunately, that does fail, it means we're going to continue to drop lower. Now, rather than looking at the daily chart with a lot going on here, let's have a quick look at the weekly chart. Puts things into a bit more of perspective and gives us a bit of an easier overview of what's going on. So if that point failed, which is sitting roughly about here at 81 cents, where are we going? Well, realistically, probably to about this point over here, which is at 66/65 cents. So I'm going to put in place as well another line just down there, and we can see that is sort of, oh, actually, you know what, 67, because we bounced off a bit as well. And then if we go back to the daily chart, that should help indicate to us that we are, I suppose, on the money as much as possible. Yes, as you can see, plenty of price action, plenty of touch points across the way over there. So that really would be if this point of support obviously did fail for us. Hopefully it doesn't occur, but we know, of course, with these things, they do typically seem to occur if we are trending downwards. You can see that downtrending line continuing to move in that direction as well. All in all, I suppose things aren't looking super positive. The main positive I can see from, I suppose, the get-go here is from a volume point of view. As you can see, we've had a big green candle on that bounce day, so obviously a bit of strong support coming in there. But other than that, not too much going on that we can really analyze at this point in time. From a short-term downtrend perspective, I suppose you could take the high point up here and say, hey, that is the major point we need to, try and breach and try and get through in order to start moving potentially upwards again. But I think at this point, most things are just dictated overall by the market. So let's have a quick look now at a few more indicators. First and foremost, RSI. I imagine this is going to be quite low. As you can see, when we did bounce, we had hit the oversold range, basically smack bang on 30.33, and we've come back up. So this, I suppose, range being hit, as well as obviously a key point of support, is likely the reason for our nice little bounce. Still low, sitting at 37.34. Room to move down, room to move up. Time will tell what will happen. MACD. Let's have a look at this one now. And as you can see, we crossed down back here when we had this decent red candle and then our support was broken. Now it looks like potentially we are seeing that 12-day EMA cross back up to the 26-day EMA. That is really what is going to drive us in an upwards direction if we are able to see a good cross, and we need to see a cross of a bit of significance. Hopefully that would allow us then to break through, of course, this little downtrend that we're seeing here, maybe get back above $1.01 as well. That will be the ultimate goal. Overall though, what is my target for today's video? Well, I think it is realistically quite simple. I'm hoping that we do see a cross, but I think we're going to have consolidation down to this point. The cross will occur, will break up, likely then touch $1.01 before then coming back down to trend sideways again. That is my prediction of what will happen. Will it happen? Time will tell. But I do think that, as well as the 20 and 50-day moving averages coming and moving down with it as well, are going to act as resistance, resulting in this being the likely option. That wraps up our analysis on ADA today, guys. I'd love to hear your thoughts down in the comments section below. Of course, if you did enjoy today's video as well, make sure you do leave a thumbs up. And if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.